And that's worked out well for one of the calls my next guest made right here on the exchange back in August of 2023 when he told us he preferred Verizon over Tesla. Since then, is this true that Verizon is up 41% versus Tesla's 6%?
Sure, entry price is everything, Kelly. Right.
Like that, it really is, though.
Right.
Chris Grisanti is back here with me. He's the chief market strategist at MAI. Because we see these growth stocks go on these huge runs to the upside and downside, we kind of never get the chance to put it into this larger perspective.
That's really true. And what a lot of investors miss is that you have to choose a great company, but you also have to choose a great entry price. And the valuation, especially over the last several years, has really gotten out of whack as growth has outperformed value by the most ever that we've ever seen. So now we're just kind of getting back.
And it's not just a kind of high flyers versus steady Eddie thing. So you also have flagged, look, is there something more cyclical the market is trying to tell us? And the average person might turn on and go, yeah, obviously. But,
right. But
we're trying to figure out, is this just a correction from overexuberance, or is there a slowdown coming? So what are you watching?
I think that's a really good point. I think something different is happening, and I think it's important. So what you've had over the past couple of years is every so often these tech stocks will get ahead of themselves. They'd pull the market down with them, and we'd have what I would call a natural, probably healthy correction. This is not that. What we have here is the economically sensitive stocks leading the way down. You've got banks that are tanking, you've got airlines that are tanking. The worst groups are the financials, the industrials, and the consumer discretionary like retailers. So this is the market saying economic slowdown. Now, is it right? You know the old saw about the market predicting 8 of the last 2 recessions. Maybe it's wrong. The problem is, 1, it's different this time, so people should pay attention. And 2, what generally happens is things can fall even on irrational fears, and then they become self-fulfilling. If you're a purchasing manager at a company, maybe you're going to defer purchasing, maybe you're going to defer hiring, maybe you're going to defer CapEx plans, and then it becomes self-fulfilling, and that's what I'm concerned about.
It morphs from a market event into an economic event.
Exactly.
So you're saying in the past corrections we've had the past few years, when we see these big tech declines, it's mostly been centered there.
Right.
And now, because people go, well, yeah, but it's centered in tech again here as well. So, I mean, the momentum stocks are, blowing up, so to speak. I don't want to put it quite that strongly, but
sure.
Why are they showing some of the biggest areas of weakness? They're not kind of benefiting from any, the whole, you buy growth when there's no growth, like that kind of trade.
Well, I think it's interesting because through the end of February, so the first 2 months of this year, the market's was kind of mediocre, and the Mag 7 was actually down slightly, and the tech stocks weren't doing well. But the banks were up high single digits, and the airlines were up. Now that's all turned around. Tech continues to lead the way downwards, but now it's joined by these economically sensitive stocks, and that's kind of flashing a yellow signal.
It is odd to wake up and see the airlines down 7-8%.
Right, every day. I mean, for the last week. That's
now,
right.
I've had some people write me and say they're buying them today. What would you say to those investors?
I think, well, they certainly went up a lot at the end of last year. I think, historically, airlines have been the canary in the coal mine. They're so economically sensitive to high fixed costs. So they could be right. It's just a little too much risk for me, and they always look cheap at the top, so it's tough.
Larry Adam was with us a couple of moments ago, and he said he'd look at the Mag 7. I'm not sure if he would include Tesla, but and he'd look to be buying here on areas of this. There are stocks in there that you like as well, right?
There is. For example, Google now has fallen so much. It's less than 16 times next year's earnings estimate.
Is
so
it really?
That's my favorite, and probably not coincidentally because it's the cheapest one. It's also the only one that's kind of below a market multiple at the current valuation. So I like that, but I don't think it's at all irrational to start sniffing around. NVIDIA is at 20 times next year's earnings. The question there is
20 now.
Next year's earnings, right? But the earnings growth is so fast. So the question now is it cheap enough? Because sure it is. The question is, are those earnings estimates going to be right? And that's a tougher question with NVIDIA, I think, than with some of the others.